Now, the year 2025 marks a pivotal time for Nigeria's point-of-sale ecosystem as Central Bank of Nigeria introduces recent reforms focused on geotagging POS terminals, a 10-meter geofencing rule, and a one-bank-bound framework. Now, these changes aim to strengthen oversight, enhance data integrity, and curb fraud, amongst others. The report also provides a comprehensive analysis of the Nigerian POS market, examining the scale and growth of transactions, adoption trends, and structural shifts in the payment ecosystem. Joining me now to discuss this further is Funmilayo Oladejo, who is Investment Research Analyst at PSC Research. Funmilayo, good morning to you. Many thanks for joining us on the show.
Thank you very much.
You're most welcome. Let's begin with the potential impact of the CBN's geotagging and geofencing reforms, impact-wise in terms of the Nigeria financial inclusion drive. What is your assessment of this?
So firstly, I would like to talk about what geotagging and geofencing means. So for geotagging, it's just like putting a location sticker on something. What do I mean? For example, if you post a picture on Instagram and it shows something like Lagos, Nigeria, that's geotagging. In relation to the POS or agent banking, I would say geotagging means that banks and regulators, they know exactly where a POS machine is physically located, while for the geofencing is like a virtual boundary over a location. So the POS can only operate within that area. For example, under the CBN new rule for the POS ecosystem, we saw that the POS terminals are only allowed to operate within 10 meters. And roughly that is about 13 to 14 big steps of an average adult walking. So this means that if the terminal moves outside of that area, it will stop working. So looking at the potential impacts, it's both progressive and challenging. On one hand, the geotagging and the geofencing could help to reduce roaming fraud, improve the oversight of transaction monitoring, and at the same time help to strengthen the trust in electronic payment services. However, informal or smaller agents, they could be excluded, especially those that they move from one location to the other. I believe that if the CBN combine these new reforms and introduce capacity building and technical assistance, especially for those in the rural area, it will help to expand, financial inclusion rather than restrict it.
Right, absolutely. So traceability and fraud risk mitigation would be the pros of it, but then we could also exclude people. It's quite the mixed bag, isn't it, there?
Yes.
Now, this report highlights a 10.45 trillion naira POS transaction value in Q1 2025. What structural factors drove this exponential growth?
So, as of Q1 2025, according to the NIBSS report, we saw that the POS transaction value is 10.45 trillion. That's a massive 209%, year-on-year increase compared to what we saw in Q1 2024. And a couple of factors are responsible for this. These include, we've seen rapid POS deployment. Particularly in markets, small businesses, and making, cashless payments accessible to consumers. At the same time, we've seen, improved digital payment infrastructure, especially faster transaction processing, and interoperability between banks and fintechs. These has also encouraged consumers and merchants to adopt POS transaction. And I would say, lastly, the consumer changing behavior, where they shift from cash into a reliable, traceable electronic payments, has also helped to drive this exponential growth that we saw in Q1.
All right, let's talk about infrastructure accessibility now, especially, particularly for smaller agents. With, 5.9 million active POS terminals, how might compliant costs and technology upgrades affect them in 2026?
So, for the smaller agents, I would say they may need to the compliance cost would definitely rise, right? They may need to register formally, maintain transaction logs. At the same time, they may need to adopt, fraud prevention protocols, which could add to their cost and some complexity to their business. And this could squeeze their margins and also challenge small operators, ability to compete. While for the fintech, managing agent network could lead to, we require higher operational spending in terms of system upgrade, monitoring tools to ensure compliance, and at the same time, staff training as well. So smaller fintechs may find themselves struggling to compete or scale. And this could potentially lead to market consolidation and reshaping the POS ecosystem. So the CBN could ease this transition by probably offering a phased implementation timeline or provide some sort of support to smaller players.
I think that will surely be a fair approach, isn't it?
Yes.
Especially in light of all the benefits they could possibly be missing out on if that adoption doesn't work. So, reform many times within the sector is always a good thing. Yeah. But let's look at some of the biggest short-term risks for the financial sector as the CBN enforces this one agent, one bank rule. In fact, let's talk about what that really is for those who are not in the know about that.
So, according to the circular released by the CBN, the one agent, one bank rule it means that a POS or an agency bank agent is required to operate exclusively with a single financial institution, to improve compliance and reduce fraud risks. However, that will definitely introduce some short-term challenges, which could include, we could see some potential agent attrition. Some may resist this exclusivity. At the same time, there might see, reduced network infrastructure, especially in the rural and underserved areas. And also, we could also see, it could also introduce some pressures on the banks and the fintech, for them to comply, to ensure that they comply with the new rules in terms of tracking and tracking agents' exclusivity rule, that they comply to that to avoid regulatory breaches. Overall, the short-term challenges could create, some disruption, but the overall aim of the regulation is to strengthen the digital payment ecosystem and improve investor sentiment in the medium and long term.
So depending on, how one wants to view it, you could either look at it in terms of long-term effects or basically, weathering the storm in the short term. That will be, we've heard about, ISO 20022, for quite a bit, quite highly anticipated. Let's talk about this migration and how it will improve Nigeria's cross-border payment framework for the long term, that is.
So the ISO 20022, it's an international standard on financial messaging. What do I mean? For example, we've seen countries like Kenya and South Africa adopted this standard, while the likes of Gambia, Mozambique, and Malawi are in the rolling out the testing phase. So what this ISO 20022 introduces, it introduces a richer and a more structured payment data. It also includes, standardized payer and pay identifiers and detailed payment information. So I expect that it would help to, improve reconciliation and also facilitate, payments across border. And this can also help to, prevent fraud as well by deploying, fraud analytics and the likes. So overall, it is expected the migration is expected to be of good benefit to the POS ecosystem.
Right. You've alluded to fraud quite a bit, which really is at the top of mind for everyone who is pretty much risk averse when dealing with financial systems, especially on the global scale. This report notes that 50 billion naira was lost to e-payment fraud in 2024. How effective do you believe these reforms will be in curbing much of these losses? You alluded to quite a few of them earlier, but let's talk about it more robustly.
So the reform will reduce fraud significantly, especially those related to clown POS terminals and unregistered, agents, because it's help in the tracing the specific location of a device. However, it's not, foolproof like 100%. Fraud tactics, evolve quickly. So what I expect is that the reform is going to close some existing loopholes currently in the system. But what is expected going forward is that user education should be prioritized. At the same time, the government should introduce, stronger KYC processes and real-time fraud analytics that could help achieve a lasting impact of this new regulation.
Right. After all, security is key ultimately, because once that's sorted, then we become a lot more relaxed. But let's talk from a macroeconomic standpoint now. Do you see this new regulations boosting investor confidence overall, or just simply creating temporary market distortions?
So the new reform is expected to create some short-term disruption and is likely to boost investors' confidence over the long term. For retail investors, improve transparency and fraud prevention, and a reliable payments channels could provide greater security and enhance their increase their trust in banks and fintech. Although temporary challenges like shortage of agents, or slower transaction could create some short-term uncertainty. While for the large businesses, they could benefit from a reliable and traceable POS transaction, which could help in cash management and planning. Although operational adjustments may be required during the phase of transition, so overall, it's expected to create some short-term distortion. However, in the long term, it's expected that it will boost investors' confidence in the Nigerian digital payments ecosystem.
Right. So in the meantime, a lot of sensitization will also be very key, of course, with the training that you mentioned earlier. Let's look next at the 10-meter geofencing rule in more detail. How will this influence POS agent distribution between urban and rural areas?
So the 10-meter geofencing, it's going to strengthen, fixed location agents, especially in the urban area where there is dense commercial activities, which could justify the cost of compliance. And also, however, for the rural areas, we could, agents move from through multiple communities. It's the compliance there could be a bit difficult. Without targeted intervention like improved network infrastructure from governments, it could be a bit difficult in the rural area. So, and this could, temporarily widen the access gap between the urban and the rural areas.
All right. Okay, so ultimately that would be the bigger picture. So it's all about, we have reforms, but infrastructure to back it up will always be great. If you joined us midway, I've been chatting with Funmilayo Oladejo, who is investment research analyst at PSC Research for Life. Thank you so much for this insightful chat. We'll see you again very soon.